I've talked about this before. This is the worst quarter of the stock market since 2022. 2022, if you remember, was a bearish year in stocks. This quarter, it's been pretty much the same. We topped out just below 700 on SPY and have really been dropping all the way to the end of the month before getting a little bit of a rebound. Is this rebound likely to hold? Well, here's the thing. Traders are not buying the dip like they did in the past. Only this time, the dip was tariffs. But because we've got potential problems in the Middle East, we're not seeing the traders coming in buying the dips like they have before in the past. And you take a look at the S&P, it tells the story for the entire month of March. We lost most of the move. Most of the downside that happened in the last 30 days. Meanwhile, oil having its best quarter in decades, nearly doubling in price. This is a chart of USO that you see here on the screen. And I mean, we started out the year with USO trading at or below 70. And already now we are getting close to touching the 140 area. Again, I got to ask this. I say, is this a short-term pop or is there something more to come? And when I talk about the pop, I'm talking about what's happened just in the month of March. Because just like the stock market dropping the most in the month of March for the Q1, USO and oil have made their biggest moves of the quarter. They've also happened in the month of March as USO went from just above 80 to where we are now in the high 130s. Again, are we going to see a bubbling over, if you will, of oil and USO, or is this rally likely to last? And again, I think the next 24 to 48 hours might tell us something here, but this could also be a longer-term move, which got me thinking, what about the last several wars that we've been in and what the overall markets did? Because if oil it moves in opposite reaction to the stock market, and it did in most of these cases, let's go back and look. So the last 6 wars that I did some research on go all the way back to World War II. And you'll see there, I've got in these columns, I've got the actual war, all right? I've got the pre-war drop. This is where the jitters come in. This is in the bottom timing of the market, and this is a 6-month return following the bottom. So if you take a look, for instance, World War II, we saw a 12% price drop before the war even started. So Korea had a 5% drop. Vietnam and Gulf War were both 10%. The Iraq War 2003 was 15%, and Ukraine was 19%. And this is all coming into the current conflict we're in right now. Every one of these saw bottom timing literally near the entry, which I'm going to show you that in a moment. And then the 6-month returns were all positive in double digits. All right. So what's the timeline? What's the pattern? Well, the time is since 6 months prior, 3 months prior, right when the war is starting, 3 months after, and then again 6 months after. And as you can see, in every single one of these situations, this pattern seems to represent fear months before. Panic in the stock market was when it starts moving the last 3 months, which we've seen now. Has the last quarter dictated that panic session that we're looking at? Potentially, it definitely shows it in oil more so than it does in the stock market. The bottom is the bottom in, and that's what we're trying to decide. But if we miss that bottom by the day or the week, what happens 3 months after? What happens 6 months after? Well, we get the single digit to double digit and an extended double digits as we move out of relief and into trend. So where are we in this cycle right now? I believe we're somewhere around the bottom area, as we've seen the last 3 months of the stock market dropping, and more importantly, the last 3 months of oil moving higher. So moving 3 months out, that takes us into July, and that could show relief for the stock market. It could also show relief at the pump if the pattern continues. All right. So with war patterns, they all kind of shape up like this. In the cases I've shown you, all right, going back to World War II, 100% of the cases show the markets, and I'm talking about the Dow, the S&P, NASDAQ, the overall market was up 100% after 6 months, all right? 6 months after the start of those wars. And up in the last 6 wars, from World War II to present. The data suggests right now that we are somewhere around the bottom phase and looking to climb out of that phase. When you add everything up, and again, there's no guarantee that this pattern is going to work. But with us now 75 years looking at 6 wars of data, and even going back farther, if you go back prior to World War I, this pattern still holds up very, very well over time. Guarantees not there, but if the pattern repeats itself over and over and over again, you know which direction I'm going to head into.